What's going on, y'all? Welcome back to another video. Today I'm going to be explaining to you guys how I make 6% average on most likely every single trade that I take using this ICT concept. You know what I'm saying? So right now, as y'all can see, I have this little picture that I've drawn right here, and it's just telling you that this is how I'm explaining to you how I make 6% every trade. So in my trades that I take, I have a risk of 2%, and I go for 3-to-1 risk to reward minimum. So I risk 2%, and I don't go for nothing less than a 3-to-1 risk to reward. Sometimes I go for 4-to-1, 5-to-1, but nothing less than 3. You know what I'm saying? So if you do the math down here, 3 times 3 risk to reward times 2% risk will give you 6. So on one single trade that I'm risking 2% on and going for a 3-to-1 risk to reward, you will get or gain 6% of your capital. And if you look to the right here, I have something else. So I have when I lose on my 2% trades and I go again with the same risk and I win a trade, I have 6%, and then you would get a 4% gain. So if I lose a trade and then win a trade, I would still gain 4%. You know what I'm saying? So vice versa, if you're going for a 1-to-1 risk to reward, if you lose one and then you win one, you're at break even. But when I lose a trade and win a trade, I'm at 4%. You know what I'm saying? So I love going for nothing less than or 3-to-1 risk to reward because it allows you to have major room for loss. You know what I'm saying? And now with that being said, I'm going to show you guys the setups that I take in order for me to capture nothing less than a 3-to-1 risk to reward. You know what I'm saying? Let's get to it. So these are the trades. Hold on one second. Let me log into my account real quick so I can show you guys my execution so you won't think I did not actually take these trades. All right, y'all, logged into my account. Y'all see right here, I got executions open, and this says AMP Live. Executions AMP Live, right? They don't got my executions up here, bro. They don't got none of the executions that I made. So I just wanted to be transparent, so y'all don't think I'm lying. You know what I'm saying? They ain't show none of my executions. But let's get into the video. All right, y'all. So this is how I make 6%. You know what I'm saying, with every trade. This is, I ain't gonna say with every single trade, but this is the trades that I took this week. You know what I'm saying? This is the trades that I took this week. So one of them was this fair value gap long that I took. I'm gonna show you guys why I went long and everything, because in order for me to take a trade, I have to have a narrative and a bias behind it. So as you can see, we have this high up here, and pre-market we dropped down and took out these sell side lows, which is manipulation, and then we got our textbook breaker pattern, run on stops. You know what I'm saying? Come back up into it, shape the market structure. We got these breakaway gaps, and then we're obviously running to that buy side. So that was my narrative for that trade. I'm gonna just go back to it real quick. All right, so you guys can see. All right, this is my exact entry and stop loss and take profit. So I got in at this fair value gap, right? So you got 930 right here. We got 930 around here. We got this bullish order block. I said bullish order block. We got this bullish order block come down, didn't take out any sell stops, but we already did it pre-market, so I wasn't expecting that. We trade higher, and we create a fair value gap here and another fair value gap right here. And the reason why I traded this first fair value gap is because we are in a hurry to run this buy side from all the price action that happened before 930, and I had a stop loss that was below consequent encroachment, which is the midpoint of this fair value gap. So I did allow it to trade back in here just in case it did want to. You know what I'm saying? So I traded, boom. I traded inside of that fair value gap, the high end stop loss, like right here. And I targeted a little bit over the high, so I targeted somewhere around there. So this trade specifically, as you can see, it didn't have a 3-to-1 risk to reward, right? But I have a system to whereas I capture 60 points. Usually I would risk 20 points on literally like every single trade. And if I make 60, it would be my 3-to-1 risk to reward. But on this one, the stop was a little bit wider. So I didn't get that 3-to-1 risk to reward, but I did capture my 60 points. So for me, that was still like a 3-to-1 risk to reward win because I still got my 60 points. But I did risk a little bit more, but it didn't matter because, we won a trade. So that was the narrative behind that trade. And yeah, that was a nice run. Nice run. Let's go into the next day. So that was Tuesday. And okay, this was Wednesday. This was more of a 3-to-1 risk to reward trade. Actually, this stop was a little bit wider too. I ain't gonna lie. But okay, so with this trade, and as y'all seen in the beginning of the video, I had showed y'all if I lose a trade and win the trade, I'm up 4%. This was this case in this scenario. So before I won this sale, going down to the sell side, I took a long inside of this fair value gap right here. You see price wicked into this fair value gap. And I targeted this high. I was targeting this high. That didn't work. So let's go on the 5-minute chart real quick. I'm going to show y'all my whole thought process during that trade. So when I went long, trying to reach this high, we was falling short, right, on a 1-minute chart. So I noticed that I was on the wrong side, and then I looked back and I realized at 8:30 we had high impact news. So we ran this high at 8:30. This is the 8:30 candle. We ran this high, and then we had displacement lower, and then we left fair value gaps. And then from 9:30 we traded back into the fair value gap. Now, if you don't know, that's ICT's basic 2022 model. You know what I'm saying, on the 5-minute chart, but I don't trade the 5-minute chart. So I did get stuck in that manipulation on the 1 minute, but I did turn it around. But that's your basic 2022 model, and I did realize that right after I lost the buy trade, so I just switched my bias and was able to win. You know what I'm saying? So that was a scenario where I was able to capture 4% after losing. You know what I'm saying? Even after losing. So like I said, I took this long, and then we have a run on this high. We have displacement and a fair value gap. Price didn't trade into that fair value gap, so I classify that as a breakaway gap, which means price is in a willingness to get to where it wants to go to very quickly or faster than if it didn't create breakaway gaps. So we got another displacement candle here taking out this low. And what I like about it is this fair value gap is inside the range of this low to high. You know what I'm saying? So it's still inside the range of premium. And this is what the trade looked like. I enter as soon as it got into that fair value gap. I put my stop loss over the body candle right here, over the body. And I targeted this low. So this was a 2 to 8 risk to reward, almost a 3-to-1 risk to reward. But if you see right here, I said that usually my stop losses are 20 points. This one is more like 30 points or like 35 points or something like that. So that's why it wasn't 3-to-1 risk to reward, but very close. But I still got, look, 617 all the way down to 556. Bro, that's well over 60 points, bro. So I got my 3-to-1 risk to reward win with that trade. And I got my 4% after losing. So that's why, oh yeah, let me show y'all what I targeted too. Okay, so after failing to go higher, I took this short down into the bottom end of this inefficiency. I didn't take it down to the sell side because I knew if it hit this inefficiency, we was probably gonna get a type of retracement, and we did right here. And I didn't want to sit through that, so I just took out the low hanging fruit right here because that's still a target. Imbalances and lows and highs, all liquidity, bro. So that was my target for there. And like as you can see with my trade, in order to hit 3-to-1 risk to reward trades, you have to get in. Well, for my trading, you have to get in the beginning of the move, and you have to sell or buy to a high, a low, or a high, a major high or low, not one of those short-term highs or lows. The next point of liquidity. That's how you get these easy 60-point runs, bro. I'm telling you. This one was another example where I lost the first trade and then I won, and I was still able to get my 4%. So going into this day, I went long inside of this fair value gap. I'm gonna go on a 5-minute chart real quick. So going into this day, we had these highs right here, and then we had this new day opening gap. This gap right here that didn't get filled all the way in. So I was kind of bullish and wanted to see price get back up into that new day opening gap sometime soon. So I was bullish. So I went long on my first trade. But once we traded to this high end of the inefficiency and we couldn't break above, I quickly switched my bias and I targeted these sell side lows right there. Right? These sell side lows is what I targeted after I realized that I was on the wrong side. So that's just me telling you guys that you don't have to be right every time to win good trades. You know what I'm saying? Like you just have to pick the right trades, bro. I'm telling you. You don't gotta be right all the time, and you can, there's nothing wrong with losing, bro. So I got stuck going long. I got in at this fair value gap. Price went up a little bit. It then came and stopped me out once it took out this candle low. And um yeah. So after that, I was just waiting for a setup to go short. So after we had this shift in market structure, I was really confirmed that we were going down to these sell side lows after we broke that low. And we did have a fair value gap here, but I wasn't really confident enough in that fair value gap, so I still waited. So boom, price came all the way down here. At this point, I was getting a little bit antsy, like, oh, I just missed a trade. But luckily, we got another run up, falling a little bit short of these highs, and then I seen us displace right here. So after I seen this displacement, I took a quick short, and they fell. They literally made like a fair value gap. So I got in like right here, and it made the fair value gap right here. But I knew that they was gonna make a fair value gap because I've been trading fair value gaps for 3 years now, bro. I can tell you when a fair value gap gonna form before it forms and where it's gonna form. I'm saying just based off experience. So yeah, I traded this fair value gap all the way down into this to that sell side. So boom, I got in like right here. Stop loss was right there, and then target was right there. So this was an actual trade where I did get my 3-to-1 risk to reward. But as you can see, they all was over 60 points. So um and don't be in the comments like, bro, that's not 3-to-1 risk to reward. Bro, that was just this week, bro. Like, majority of my trades are actually 3-to-1 risk to reward or more. You know what I'm saying? Like, the majority of them. But you know, the volatility that was just in the last week is still a little bit here. So, like, bro, the stop losses are a little bit bigger than what they was a couple weeks ago, bro. The market is still finding its footing. So, you know what I'm saying? I have to adjust to just having a wider stop. And you could see me talk about that in my last video, by the way. But let's get back into the video. So, I got in at this fair value gap, or I used this fair value gap to get in. We had a quick tap into it and then immediately displaced from it. That was very, very nice to see. Creating this order block right here. We traded back into the order block. We got some more displacement. And then we got this little spike up right there. Honestly, I did not like to see that, but it came back up into the order block and then traded back down into the sell side. The reason why I didn't like to see this come up was just because I was ready to get out the markets. You know what I'm saying? Like, usually my trades be over before 10 o'clock, but as you can see, I was in this shit until like 10:30, so like I was ready to get off the charts by then. But end up hitting my sell side, and that was for a 3-to-1 risk to reward I showed you guys, and boom. So like, if you look at all the setups that I just showed you guys, all of them are literally at the beginning of the move. Starting off with this one, we have our first shift in market structure right here. Right, this is our first shift in market structure. That's our first confluence that, okay, price is now bearish, right? And I got in where? So this price is 438. I got in at 420. So just like 15 points, 15, 17 points away from the initial shift in market structure. That's still close proximity, and we still have about 70 points of range until our sell side lows. And that's what you want to make sure too. Any trade that you guys take, if you do want to have this 3-to-1 risk to reward model, specifically, bro, if you trade NQ, look for trades that have at least like 60 to 80 points of range. If it has more than that, then good. But from your entry to your take profit, is it at least 60 points of range? If not, then it might not be the trade that you're looking for. But if it got like 75 points of range, then you could capture a good 60, 65 points out that range. And that's the trades that I'm searching for. So this one, close by, this entry was in the beginning of the trade, which allowed me to capture a pretty nice move. This trade right here, as you can see, the initial shift in market structure was right here, and I got in literally inside of that, and then a good 70 points of range into our take profit right here. So again, the beginning of the move, I'm not getting in down here, I'm getting in inside of the premium. My tongue just twisted. I'm getting in inside of the goddamn premium, bro. Don't play with me, bro. Okay, this trade right here, I didn't really get in at the beginning, but I did because this was the beginning of a setup. Like, there was nothing here to get me inside of the trade, but when price created these fair value gaps, I got in at the first fair value gap, and I took it up to buy side for a good 60 points, and boom. So with these trades, bro, you know what I'm saying? I ain't know if y'all could see, because I'm noticing I gotta zoom in for y'all to be able to really see. Know what I'm saying? But yeah, so like basically you want to catch like the first fair value gap right after the run on liquidity and the shift in market structure. That first fair value gap is that fair value gap that you want to catch. But now I'm saying, I hope you guys enjoyed the video. If y'all want to see more videos like these, bro, let me know in the comments and like the video. I'm definitely going to be doing more videos like these anyway. But yep, that's how I make 6% on damn near every trade that I take. And yeah, that's it. I'm going to see you guys in the next video. Yo.